Good afternoon and welcome to today's trade of the day. My name is Paul Scott. This is Platinum Trading Systems. Now, we've had one of those days today where the institutions have been stopping clients out left, right and centre. The markets have moved in a massive fashion today. These days are pretty much few and far between, but the bears out there have really sort of got a sniff of blood within the last few days. Chinese stock market, yuan being devalued twice in a week. Still more bad news out of China contracting. The world has taken that, the globe has taken that as basically let's just get out whilst we can. So lots of profit being taken by some hedge funds and institutions today, stops triggering, markets moving absolutely massively. So what have we been saying? Well, last Friday we actually sent some charts out to our clients here. I want to show you two in particular. One is a gold chart and one is the S&P 500 chart. So as we see on here, this is the analysis that we published last week. And we said, okay, the 1975 level should be major support, and if this area breaks, it's a free-for-all a la 2008. Now, what has actually panned out and what has actually played out today? Well, this is one of those things about trading in stock markets, trading in indices. You suffer from market closing, market opening and the gaps. So let's just have a look at the S&P today. Okay, so the S&P closed up here on Friday night at a price of 1971. We opened today and then gap down hugely, as we can see here. Next available traded price, so 1971. Then on the open, and we're looking on a 5-minute chart here, on the open 1913. Market crashed all the way down to 1867 before having sort of a bit of a sustained rally here. Now again, this is, if you've never been through this before in your life and you've never seen this before, this is institutions stopping people out. This is panic insurance in the market. This is what is known as, you know, the herd mentality, the crowd mentality. Everybody getting out, everybody stopping out. So the Dow following the same shoot as the S&P, but let's have a look at the Dow in a second. So this market gapped here and we gapped nearly 60 points there on the S&P. Again, market moves like that not seen since 2008. Let's have a look at the Dow as well. So the Dow here, we closed Friday night at 16,462. We gapped, we opened here at 16,206, and then very quickly again stops triggered all the way down to the sort of 15,920 level there. So huge amounts of volume going through today, and that sort of spilled over into the gold market. So let's go back and let's have a look at the chart that we actually gave out for gold. Now we actually gave this one out last Thursday. We reposted it again on Friday. Now basically what we said here with gold, that if it breaks through this upward channel here, okay, we're looking for a pullback and then the market to continue. So where have we sort of seen gold going today? Well, obviously as the stock markets, everybody's unwinding, there's money coming out of stocks. What's the traditional asset class to hold? Well, it's gold. So what we've seen today on the back of the moves in the indices markets is, you know, sort of gold started off this morning in a fairly quiet fashion, but around about the 1152 level we shot all the way up here on the back of you know, sort of the open in the States, and with the stock markets we rallied up to a price of virtually there 1170. So quite a big rally in gold as money's being sort of ploughed back in. Now that trade that we looked at here, we're looking for a continuation on gold up towards the 1430 level. If the Fed don't step in and do something now about raising interest rates, we can foresee that the stock markets are going to continue to fall, and that gold will actually be rising in price. So what we said this morning, you know, and you don't always know when these things are going to happen, but what we said this morning was, you know, look, again we reposted this S&P chart and we've said, you know, look, large stop hunts that is almost unheard of. The stop hunts were not only just in the indices. Across the last few weeks we've had oil, the DAX, Aussie dollar, the Kiwi, Dow and S&P. So what have we had today? Well, we've had very much of the same. Huge stop losses going today in the markets. So I just want to show you the reasoning behind why these stop loss orders were triggered, and why looking at the dollar index is very key. So we've plotted the dollar index back here using a fib level. We hit an the high this year of 100.37. Now this is on the Dixie. Okay, so this is the strength of the dollar index, and now the strength of the dollar index has been declining, and then we sort of reached a bottom here at 93.13. From there we had a rally. So that what you would say is this is on a weekly chart. So we had 1 week and 2 week of continued support around this level. It would have found a base. So what happened was as soon as we triggered through the 93.13 level, stop loss orders were going. Now if we look at the Eurex, which is the strength of the euro versus the world's currencies, again it's the reverse of what's been happening in the dollar index. We had 100.37, and as soon as we burst through there we had stop loss orders triggering. So what does that actually mean for the euro today and for the rest of the currencies? Let's look at them one by one. So the euro, you can quite clearly see here, this is when this was triggered. We've had a range on the euro today, believe it or not, of 113.72, sort of early doors this morning, all the way up to 117.15. So a massive upward turn today. Stop loss orders triggered. As we can see, we then ran into major resistance up there at the 117.15 level, and we've since retreated down. But this looks like a very bullish close for the day, which should signal an even more sort of bullish week. The pound again pretty much doing the same, although not with quite such ferocity. We had a low pretty much this morning in the pound as 156.32, all the way up there to 158.05. Again, hit a bit of resistance there. We've since sort of retreated down at 157.35 as we speak. The Canadian dollar. So what's happened here? Well, again, we've had the price of oil, which has been very prevalent in the news again today. Price of oil taking a tumble. However, the strength of the Canadian dollar versus the dollar, been a bit of a funny one today. The price of oil continuing to fall, yet the CAD has actually gained in strength. That's only versus the weakness in the dollar today, with that dollar index channel going. So we've had there a high of 132.89, and we had a low of 131.58. So quite significant moves. Again, stop loss orders being triggered here. As you can see, the momentum is just all in one direction, and as soon as we hit some support, bang, the market's flying back up again. So now let's have a look at the yen. Now the yen today has had a huge range. The Nikkei through the floor today. We've had a range on the yen 121.92. Now this, ladies and gents, is what you call a traditional and very fast and rapid institutional stop hunt. Look at this. The price went from 118.91 all the way down there to 116.13. We nearly had sort of a 300 pip drop. This is on a minute chart now. 300 pip drop in the matter of 2 minutes, and then the markets hit the support. This is where the institutions are stepping in, filling their clients. Their clients have been going absolutely crackers because of the slippage on their trades. But look, if the volume's not there, the volume's not there. This is a classic case of institutions pushing a market down and then actually wanting to be going long. So as you can see here, it rallied all the way back up here to pretty much where we started before the stop loss orders went. Institutions out there making an absolute killing today. So let's have a look at the Kiwi dollar again. Look, that's on a 5-minute chart. This is on a 1-minute chart. Look at this. As soon as that Dixie crossed that channel and stop loss orders were going, we dropped from a price of 6,500. So stops going through 6,500, and we all the way down here to 62.22 level. Huge amount of movement. Again, it's all in one direction, and as soon as the institutions say yes, that's it, bang, I want to step in and start buying, you can see the market's recovered all of the ground that it lost. Again, let's look at the Australian dollar. The Australian dollar again started out this morning with a high of 72.76, plummeted literally within a couple of minutes. Let's put that on a minute chart. As we can see again, absolutely plummeted through. Now these moves are massively exaggerated, yes they are, but this is a classic case, institutional stop hunting, institutions actually wanting to go long. So going short before going long, that is one of the key sort of elements that the institutions trade with, and also using their client stop loss orders to give them a much better position and much better price of actually getting into the market. So we've had today some massive moves. We've advised our clients, look, we must let the dust settle across the next few days. That's the most sensible course of action. Moves like this don't happen every single day. However, what we put out this morning was on the Australian dollar, 71.75 should be sort of a key support level. Markets ensuing, markets behaving themselves and not sort of going through these levels. 71.75 was a nice place to sort of go long. However, you can't legislate for this. This is going to happen from time to time in the markets. But this is institutional trading. This is what we're teaching people. This is what we do here at Platinum Trading Systems. This is not retail trading. This is bringing you market level analysis from an institutional standpoint. This is what we teach you as well, institutional trading. Now, if you are not a current client of Platinum, we'd obviously like you to become a client, but we'd obviously like to introduce you to ourselves. We are offering a free trading workshop. If you come across to www.platinumtradingsystems and then click on the consultation page here, please leave your details with us, leave your name, leave your email, leave your telephone number, leave your details with us. One of our traders will get back to you to take you through a free trading workshop of exactly what it is that we do here at Platinum. So that's today's trade of the day. One of those days that catches the market sometimes a little bit unawares, but however, at Platinum, we pretty much got you covered on all bases. So thanks very much for listening, and that's been Platinum.